Hi friends, welcome back. So question for you. Should you short the market? Should you bet against the market? Should you short stocks? And this is the subject of today's video. I want to share my thoughts and get yours as well. So let me give you a simple answer. If you're new to the market, a new investor, a new trader, the answer is no. Don't short. It carries significantly more risk. And if you don't know what you're doing, don't do it. Just don't touch this stuff. Moreover, shorting is part of the market though. It is part of trading. Essentially what you're doing, you're betting that something will go down and you'll make money if things go down. This is opposite than going long, is when you make money when things go up. Now in today's market, it's actually really interesting. There's a lot of ETFs out there that help you to short the market. And one particular one was a famous one. This was actually the inverse Cramer Tracker ETF. If you wanted to bet against Jim Cramer on CNBC and a bet against his stock picks, this enabled you to do that. And the funny thing is the ticker was SJIM, so short Jim Cramer. And as it turned out, if you shorted Jim Cramer, it was actually not a good bet in the past year. And true story, this fund actually shut down in February 13th, 2024. So just a month ago was our last day of trading. It was started about a year ago or so. And essentially, it wasn't a good bet. Now, this doesn't mean that shorting is a bad bet all of the time. It could just be that your timing was off. And again, if you're new to this stuff, just don't mess with it. Shorting is not good for you. However, I will just say it's true. You can make money in this stuff, but it's also true you can lose money in this stuff. If you're ever curious on you just feel like there's a particular fund or something that you just know it's way overvalued and you know it should go down, ARK was a really good target for this. In fact, you can Google any of these things, just type in inverse or bear, and you can find it. So for example, inverse ARK, this was a kind of a more famous one. This is SARK, so short the ARK fund. And I always laugh on these things because when you think about this, how crazy it is that now we have opposing funds. Like literally, there's a fund out there to where you can bet against other investors. So yes, this is a real thing. Now, one of the things I want to mention too with these often these inverse ETFs or bearish ETFs is that there is decay, and if you hold it for a long period, essentially you're paying a management fee, paying a how can I say, like a interest fee, because a lot of times these things are on leverage. So they're not great investments, guys. They're basically for trades. Moreover, they don't always necessarily follow a one-to-one. So for example, I have this pulled up here. So this is shorting the ARK fund. It's up just on today 3.93%, whereas the ARK fund is down 3.85%. So it's not exactly a one-to-one in terms of the way that it trades, but it's fairly close. So here's another example. So I'll put on the 5-day down. ARK is down 4.7. This one is up 5.06, right? So it's not exactly, but if you put on the year, you might see it more of a difference. Yeah. So this one is again 28.2%. That's up betting for ARK, but betting against ARK, then you're down 35.8, right? So again, it's not exactly a one-to-one, but yes, this is a way to inversely go against something. Here's another one. I'm just giving you guys some examples. Sometimes they're not exactly one-to-one purposely. So this is actually 1.25x. And this is actually against NVIDIA. So you could actually do this one if you wanted to go bearish / inverse NVIDIA. And again, so like for example, on a one-day move, this is 4.97 up, whereas NVIDIA stock is actually down 3.85. So, that's around 1.25. Now, some of these are going to be times 3, some are going to be times 2. Yeah, there's all these crazy things out there. Here's another example. So Tesla, and I mentioned this one before. So like, for example, the past year, Tesla's down 12.36%. And you can take a look at this. In the past year, this thing is up 35.61%, right? This is a 2x inverse Tesla. Yes, there are these things out there. There's been a lot more interest in this stuff because, frankly, we're in this crazy bubble. And I do expect things to go down. The problem is, though, guys, and let me just point this out. So, when I look at the Shiller PE, and I've showed you this before on the channel, I tend to be more bearish because I can read numbers. I can see here that the Shiller PE is at 34.36. Basically, whenever this thing hits around 40, the market's going to crash. I just know what it is. Historically, it's happened, and you can see it. But when is the exact time that's going to happen? Will it ever reach the 40? Who knows? Could have already be started now. Sure, certainly could have. And how far it would go down again? Who knows? The thing about short selling is it's not a great investment. It's a trade, and it's all about trying to time said market. So I'll give you a simple example. So, Bitcoin is at like 70,000. Did I think it was going to hit 70,000? Absolutely not. I did not think it would hit 70,000. I personally thought, betting against Bitcoin was a pretty decent bet, but it turned out being a terrible bet, right? So This was BITI, which is betting against Bitcoin. Yes, there's something out there for everyone, no matter what you want to bet in. And if, like, for example, if you're betting against betting against Bitcoin in the past year, you're down like 68%. So not so great. If you want a plus side of Bitcoin this year, up 183%. So you guys can see the risk to reward actually isn't that good. I think it's because of decay is probably why you have this like really grossly different. How can I say? Because it's not exactly 1-to-1, right? Again, this is down 68, but if you're, on the plus side, you're up 183. So, well, thank God you didn't lose like all your money, but obviously it's not a good bet, right? Now, whether or not, Bitcoin turns around today and then from, it's going to go from 70 to, 50 or 30, who knows? My personal opinion on something like a Bitcoin, and the reason why I'm bringing up Bitcoin, my personal opinion is that Bitcoin is worth basically nothing, zero. So yes, could you make a ton of money going against Bitcoin? You totally could, but who knows, right? This stuff is trading on hopes and dreams, and lots of big whales who control the market on this thing, and who knows where it's going to go. There's no way to really fairly value Bitcoin. I think it's worth zero. If someone else could say, hey, I think it's worth 150,000 or whatever, and they can put more money in there and they can win the bet. So this essentially at this point for this kind of thing, talking about Bitcoin and shorting it or going long, is essentially gambling. There's no other way to put it. Another thing that you can do oftentimes with this kind of stuff, if you want to bet against the market, you can go the options route, do puts. I never really talk about options on this channel, be it calls or puts. I just think it's basically professional gambling. So I don't really mess with that stuff because you're looking at stocks to move on particular dates at particular prices. And again, it's basically gambling. Yes, you can make money. I want to be clear. So yes, you can make money, but you can make money betting on the Super Bowl. You can also lose money betting on the Super Bowl. So, but it is fun to talk about this stuff. And this is, kind of what we do in this channel. We talk about the market and things like that. But don't. How can I say? I always try to tell you the truth of this stuff, right? So I would, even though I don't like Bitcoin, I can literally read a chart and say, yep, if you got in Bitcoin, last year you've done really, really well. But you only do well if you actually sell. If you just hold on to this thing and never sell, and it could go right back down to where it was. So who knows? But yeah, that's Bitcoin. This has also been the case too, as well, guys, because people, probably wonder what have been good shorts lately. In the past, Alibaba was a great short. You could have shorted this thing at $300. It's down 76%, etc. Rivian was a great short. So true story, I actually shorted this at 120. Did I hold it all the way to $10? No, I didn't. I don't have that much foresight. I will say though is that it just carries a lot more risk. And when I short something, I'm happy to make money on it. And it's fine. But the longer you hold it, it's how can I say? I'll put it this way. I'm happy when I make money on a trade, and also too, I'm happy to sleep well at night. One of the things that, for example, if I say buy Apple stock, I can just buy it and hold it forever, and I'm not really that worried at all. When you go short on something, say for example like a Rivian, there is a possibility that you can lose all your money and be forced to cover. So if you don't know what that means, and let me pull up this cool diagram here that I have. So let me show you this diagram. This is a kind of an easy way to think about short selling, but I'll give you the basic gist of it. So what you're doing is opposite of going long. It's exactly the opposite. So first, let me describe going long. You guys probably know this already. Let's just say I want to go long Apple stock. I buy it for $2. It goes up in a year. I sell it for $10. I make $8, right? So very, very simple. Buy low, sell high. Short selling a stock is actually the opposite. So it is sell high, buy low. That's the basic idea. So what you do is you sell the stock at $10, you buy it back at $2, say for example. In order to sell the stock at $10, you're actually borrowing the stock from someone else. I know it's really strange, and you'll end up paying a fee on that. So you pay a fee to borrow said stock, you sell it on the open market, you hope the stock goes down in value, then you buy it back. That's essentially the basic gist of short selling. It is opposite of going long. Now, a couple of the things that I want to point out with this and why it's not necessarily recommended for average investor, it's just not, it's a trade, not an investment, is that you don't know necessarily what this thing's going to do because it's all about timing, right? It's a trade. Moreover, what if, for example, I sell the stock at 10, but it doesn't go down to 2, right? I was expecting it to go down. I wanted to make that money that we talked about, but instead the stock goes up to 50 or whatever. Suddenly I am underwater $40. And sometimes the bank will call you up and say, hey, you need to cover, meaning that you need to buy back that stock at $40. and give us back that stock because we want it back. We don't trust you're going to have enough money. And your losses could actually be infinite. They refer to this as a short squeeze. And if you don't know, this was GameStop. This was a popular thing on Reddit where basically all these people on Reddit organized to squeeze the short sellers. And you guys remember the story behind that. So I just pointed this stuff out to you because yes, you can make money on it, but it carries significantly more risk. When you go long on something, so for example, I buy the Apple stock for $2. Chances are if it goes to zero, I only lose $2, right? So you're not worried there. Now, if you're short though, so for example, if you're short, say on Bitcoin, and I say I shorted Bitcoin at 10,000 and now suddenly it's at 70, I'm $60,000 underwater on my Bitcoin. I'm like, oh my God. And then the bank may actually force you. So they'll essentially turn a paper loss into a real loss, and it'll be not so great. And theoretically, although I guess it's going down now it's at 69 now that we talk about it. I guess when I talk about something, it starts to go down, right? But theoretically, your losses could be infinite. So short selling is not great, again, for the average person. Moreover, though, it is true. You can make money going short on stuff. I regret not shorting Fisker. As it turns out today, for example, it was just reported that they're looking at going bankrupt. So the stock is currently trading at 15 cents. So yes, you can make money on this stuff. But again, it's not for the average investor. And the other thing too, which I want to mention, which is actually really funny, there's like all kinds of inverse ETFs out there. So if you want to bet against the QQQ, so basically the NASDAQ, you can do that. If you want to bet against bank stocks, they have stuff here. You can do that. Bet against biotech, you can totally do that. Bet against what is this? I think it's China. Yep, you can do that. So I had this one here. This has actually been a fairly decent one. Betting against China has been a decent bet. Generally speaking, don't bet against USA, but hey, if you bet against China, not so bad. But this is what it is. Again, I just want to make it really clear. This is the stock market. You can lose. Shorting and inverse carries more risk, and also too, you have that decay and fees that you have to worry about. So it's not great. It's fine for a trade, but not great for an investment. So that's my thoughts on this stuff. Just wanted to share it. I think it's always fun to talk about these things, and I'll catch you next video.